Welcome to the deep dive. We're here to cut through the noise, give you those strategic insights you need. And today, wow, we're looking at something big, not just an evolution in finance, but maybe a fundamental reshaping. We're talking artificial general intelligence,
Yeah.
AGI.
It's a huge topic right now. The disruption feels profound.
Yeah, exactly. Just listen to some of the voices out there. Mark Andreessen, the VC visionary, he sees AGI as the ultimate wealth navigator. Autonomous AI is working together globally, amplifying wealth.
And Paul Tudor Jones. I mean, a legend.
Right. He called this the iPhone moment for Web3. Said AI makes his, 40 years of trading intuition obsolete?
It's an incredible statement. And that line about AI doing a week's trading volume before his coffee cools while getting great returns, that tells you something's shifting.
Definitely a paradigm shift. So, okay, let's unpack this. Our mission today, a real deep dive into AIFEEX. They're positioning themselves right at the forefront of this AGI wave in finance, building what they call an AGI-based federated financial ecosystem. So we're going to analyze their vision, their tech, their ecosystem, and the strategic potential. Especially if you're navigating crypto, we're looking for those, nuggets of knowledge. What makes AIFEEX different? What's the edge?
And just so you know, this isn't just speculation. We've gone through their white paper, internal strategy docs, analytical insights.
The source material.
Exactly. So you're getting a comprehensive view straight from the source. And what struck me is they're not just tweaking things. They're talking about architecting a whole new financial order, an intelligent one.
Precisely. Let's start right there. The vision. The dawn of AGI in finance. I mean, we all see it, right? Global finance, geopolitics. It's getting incredibly complex, interconnected.
Yeah, the old ways are struggling. Traditional algorithms, even the specialized AIs we have now, they're hitting a wall.
They just can't handle the scale, the need for global collaboration, the speed needed for, really nuanced decisions.
It feels like we're at an inflection point. Small improvements aren't enough anymore.
And that's where AIEX steps in. Their core objective, as you said, is leveraging AGI. They have this proprietary financial large language model called Taquin.
Right. And the strategy is to build this comprehensive, intelligent, federated financial system. It's not just about doing calculations faster or automating simple stuff. It's rethinking how financial intelligence works, how it's created, shared, acted upon.
Okay, so AGI's power. What makes it different? It's not just narrow AI doing one thing well.
Exactly. AGI is adaptive. It learns across multiple tasks, multiple fields.
So it can integrate things like traditional finance, DeFi, smart contracts.
Smart agents, even things like healthcare, potentially. The idea is seamless integration, delivering holistic, efficient, personalized financial services.
So for you listening, this isn't just an update. It's a strategic move aiming for a totally new financial order where intelligence is everywhere and adaptable.
Think about the history. We went from traditional banks to digital payments to early smart finance with AI advisors and blockchain. AIFEE sees itself as pioneering that next stage, the AGI-driven future, powered by Taquin, enabling this comprehensive, adaptive global interaction. It's a systemic shift they're aiming for.
Okay, let's talk profitability, because that's a huge claim. AIFEEX says AGI redefines it, breaks the limits of old rule-based models. They're aiming for, and I quote, exponential profit growth and rapid and precise risk control. That's the holy grail, isn't it?
This is an extraordinary claim. And strategically, you have to ask, how?
Right. How do they plan to pull that off?
Well, they point to a few key things. Continuous self-learning, so the system always gets better.
Okay.
Full automation operations, customer service, everything. Creating highly personalized financial products that adapt on the fly.
Adapting to individuals in the market makes sense.
And critically, advanced risk control, multidimensional, real-time. Detecting anomalies, responding flexibly, immediately.
And the projection. That AGI could boost profits by up to 500% compared to traditional methods.
That's the figure they put out there, 500%. Strategically, you have to consider, what if a system can actually do that? Maximize returns and slash risk at that scale. It changes the game.
It really does. 500% would reshake everything.
No.
Okay, let's pivot to Taquin, the strategic core, the engine you called it.
Yeah, Taquin. They describe it as the world's first global federated AGI financial network. And what's really clever, strategically, is how it tackles a problem single-function AIs have. Managing lots of different AI models and juggling resources when markets are going crazy.
Right. Like, how do you switch smoothly from high-frequency trading to long-term wealth advice with old systems? It's hard.
Exactly. Taquin is designed to be the orchestrator,
Hmm.
to handle that complexity. That's a key strategic
So
difference.
it's not isolated AIs, it's a central conductor. I like their analogy of these AI modules for parsing Swift, extracting liquidity, checking DeFi contracts, forecasting macro
They
trends.
call them financial organs,
Yeah, like you can just plug them in, suggest real modularity, adaptability.
and that modularity is crucial. Then there's the decision Lego mechanism.
Okay, what's that?
It allows different AI functions, say one for compliance, one for speculation, to switch modes dynamically
Yeah.
within seconds
Seconds, how?
through real-time context exchange. The system sees the market shift, reallocates resources, changes strategy instantly. It breaks free from rigid traditional AI limits. Lets you put capital where it needs to be, whether for milliseconds or years.
That dynamic ability, that sounds like a real edge. They talk about integrating dynamic context perception, federated model collaboration, and privacy-preserving data processing.
Hmm.
And their mission, making AI finance as easy as plugging in a USB stick, always updated, best ROI, no middlemen, no complex setup.
Yeah, and that privacy-preserving part is vital.
Tell me more about that. Why is it so crucial for a federated network?
Well, think about it. You want different systems, different data sources to work together globally. But you can't just share raw, sensitive financial data.
Right, huge security and privacy issues there.
Exactly. So privacy-preserving computation uses techniques like homomorphic encryption, differential privacy, multi-party computation. Fancy terms, but basically,
Mm-hmm.
they let the system compute insights on encrypted data. The raw data is never exposed. Models can collaborate without revealing secrets.
Okay, that's a game changer. It solves a massive hurdle for building trust in these global collaborative systems.
Precisely. It enables collective intelligence without sacrificing confidentiality.
And the performance numbers they claim are, well, pretty staggering compared to humans. 150, 400% higher returns, 5,200% better decision replicability, 80% better risk control.
Even against general AI, they're claiming big jumps. 60, 95% more returns, 710% more replicability, 35% better risk control.
And they say this is based on over 3 years of data, showing Taquin consistently outperforming thousands of finance pros in access analysis, parallel operations, risk management.
Yeah, and that replicability figure, 5,200%.
What's the strategic importance of that? High replicability.
It means consistency. Predictable performance, whatever the market's doing. It takes out the human element. Intuition, tiredness, emotion.
So strategies get executed perfectly, optimally, every single time.
Exactly. And that consistency, especially with strong risk control, is what builds reliable alpha over time. Not just occasional lucky wins. It's about compounding reliable returns.
Okay, and this performance needs serious hardware, right? The tech stack sounds intense. Specialized chips like FPGAs, ASICs.
Powerful GPUs, CPUs, super fast storage like PCIe 5.0 SSDs, ultra-low latency connections, 400G InfiniBand.
Software too, distributed frameworks like RAY, Apache Flink, high-frequency trading protocols, TensorFlow, PyTorch.
It's top-tier stuff.
No.
And it's not just specs for show. They claim this reduces latency from like 510 milliseconds down to 190 milliseconds
Wow.
and boosts throughput over 2.7 times. That's the power of distributed processing.
So strategically, that speed isn't just about bragging rights.
Not at all. That speed enables the strategy. It means the system can see market shifts, process huge amounts of data, and act almost instantly.
Indispensable for high-frequency trading, real-time risk management.
Absolutely. It's the foundation for staying ahead in volatile markets. It's the infrastructure that makes that consistent outperformance possible.
Got it. So AIFEEX isn't just one thing, it's a whole suite. The 7 pillars of their ecosystem, where the AGI meets actual market opportunities. What does that look like practically, strategically?
Right. They build 7 core modules,
Yeah.
each one designed to tap into a different part of the market, but all leveraging Taquin's AGI underneath. It creates this synergy.
Okay, let's highlight a couple. They sound like major strategic moves. First, the AI high-frequency quantitative fund.
Yeah, the projected ROI on that one is, well, it's eye-watering, 365% to 800% annual.
No. And it focuses on deep market making, high-frequency contracts across both CEX and DX.
That's right, running in parallel on over 200 platforms, 5,000 plus trading pairs.
And the features: aggressive market making, smart hedging, swing strategies, order flow detection, even monitoring community sentiment for black swan events.
It's a multi-layered risk system. So yeah, it's not just speed, it's intelligent, adaptive, resilient strategy.
Okay, next. The AI CEX, their next-gen centralized exchange. the Binance for the AI ecosystem, they call it.
Yeah, and they're basically reinventing every part of a traditional exchange using AI. Token listing, order matching, market making, risk control, customer support, all powered by adaptive reinforcement learning and multimodal AI.
And the performance claims. Microsecond matching latency, like 20 to 80 microsecond.
Compared to 5 to 20 milliseconds on traditional exchanges, it's a huge difference. And throughput over 1 million transactions per second. Slippage under load less than 0.1%.
Compared to over 0.5% on traditional CEXs. Okay, so it tackles real pain points. Opaque token listings, solved by AI scoring tokens 247.
Matching delays, slippage, gone. Artificial liquidity, replaced by AI market making. Manual risk management, automated.
And they've got AI for AML, AI chat ops for instant support. This isn't just tweaking an exchange, it's rebuilding it around AI.
Completely. Then there's the AI DeFi aggregator for the decentralized world. Projected ROI, 66% to 350% annually.
What's its strategic role?
Dynamically allocating assets across tons of DeFi protocols and blockchains. Over 20 chains, scanning 1,000+ liquidity pools every second.
Okay, that's impressive scale.
But the real breakthrough, they claim, is dynamic impermanent loss hedging using graph neural networks, GNNs. They say it reduces IL rates to below 3%.
Below 3%, that's huge for DeFi. Impermanent loss scares so many people away.
Exactly. It's a major risk management innovation. So it offers automated deposit, staking, auto-compounding tailored to your risk level, and potentially 30–50% higher returns than traditional aggregators like Yearn or Beefy.
That GNN-based hedging, how does that really change the game for DeFi users and maybe broader adoption? Impermanent loss is such a barrier.
It really is. It often eats up yield farming profits, makes people nervous. GNNs are great at seeing complex relationships, so AIFEEX uses them to predict and hedge IL dynamically.
So it makes DeFi safer, more predictable.
Potentially, yeah. It could transform it from a high-risk gamble for experts into something more stable. That could unlock a lot of capital that's been sitting on the sidelines, boosting DeFi adoption significantly.
Interesting. And the last one you mentioned, AI intelligent agents.
AS. AI as a service. Customizable, multimodal AI agents working across industries.
The strategic potential there seems enormous. Cutting labor costs, expanding capabilities constantly, better personalized services, better data security.
Applications could be anywhere. AI community managers, virtual investment advisors, personalized avatars, even mental health support.
And these agents are paid for with AIFEX tokens, driving utility. And they can become NFTs. That's a whole other layer.
It is. And this ties directly into the engine driving the whole ecosystem, financially speaking, the dual token mechanism. This is key for investors.
Right. This is where it gets really, really interesting strategically, especially if you're looking for that edge. They call it a two-world economy.
You got two tokens. USDai, that's their AI algorithmic stablecoin, pegged to $1 provides stability, base liquidity.
Okay, the Citable Foundation.
And then AIFEX, that's the utility and governance token. It powers everything.
So the two-world economy part, how does that work?
Okay, so outside AIFEX, on a DEX like PancakeSwap, AIFEX might trade at, let's say, $7 or $8. That's the market price.
Got it.
But, and here's the strategic twist, when you stake that AIFEX inside the AIFEX app, the system gives it an internal anchor value, a credit price, much higher, like say $19.07 per AIFEX.
Wait, so it's not the market price inside, it's a fixed higher credit value assigned by the protocol.
Exactly. It's designed to reward long-term stakers and provide a stable internal value that boosts your reward potential.
Okay, strategically, that creates an immediate arbitrage bonus. You buy low outside, stake high inside.
That's the incentive, yeah.
Yeah.
Your effective return on your actual cost basis could be 2x, 3x higher because of that internal credit anchor.
It's like buying a golden goose for $8 on the market, bringing it to the AIFEX farm, and they say, okay, here, this goose is worth $19.07 for laying eggs.
That's a great analogy. It captures that immediate value uplift you get internally, but it doesn't stop there. There's the deflationary golden goose flywheel strategy.
Okay, the flywheel, how does that spin?
So investors stake AIFEX, the platform gets USDT stablecoins from that process.
Right.
AIFEX then uses that USDT strategically. They go back to the external market, buy AIFEX, and burn it, destroy it, take it out of circulation forever.
Ah, buyback and burn.
Exactly. It creates this cycle. Profit from staking, buyback AIFEX. From market, burn AIFEX. Reduce supply, increase value.
So supply constantly shrinks, while demand should increase because of the staking rewards and all the utility in the ecosystem.
Precisely. And as supply tightens, the external market price is strategically encouraged to rise, and eventually meet that higher internal anchor price, the $19.07.
That's a very deliberate mechanism for value appreciation. What kind of deflation are they projecting?
They're aiming for an annual net deflation rate of at least 36.9%. They project the circulating supply could drop to just 21 million tokens in 5 years.
And that could lead to a fully diluted valuation over $100 billion.
That's the potential upside they map out. It's ambitious, obviously.
What needs to happen for that kind of valuation? What are the critical factors for you listening?
Well, you'd need massive ecosystem growth, huge adoption of the AICEX, the DeFi aggregator, widespread use of those AI agents being paid for in AIFEEX.
Makes sense.
The integrity of that dual token system, especially the anchor price, has to hold. And Taquin has to keep delivering those returns. A clear strategy, but execution and adoption are everything.
And USDai, the stablecoin, acts as the bridge between these two price worlds, aiming for convergence eventually.
Right. It's secured by multi-asset collateral, AI oracle control, designed for stability. And remember, AIFEX isn't just for staking, it's rewards, governance, dividends, even a risk shield for the platform.
Okay, this brings us to their strategic positioning. And this idea of a golden window, their roadmap is intense.
Very ambitious. Full AGI ecosystem, launch Q4 2025. Opening APIs for third parties in 2026, creating a financial AGI SaaS platform.
Global expansion, AI plus DAO governance by 2027-2028. And by 2029, a closed-loop global AI financial ecosystem for hundreds of millions of Web3 users.
So the core differentiator really is that unique mix. The AGI brainpower via Taquin, the smart staking, the deflationary tokens, and that clever dual market arbitrage. It's a cohesive strategy.
And this golden window, the idea is that right now is a key opportunity.
That's how the analysis positions it. Because of that gap between the lower external market price and the higher internal credit value for staking.
So early adopters who understand this mechanic can potentially benefit from both the immediate higher rewards from staking and the long-term appreciation as the deflationary flywheel kicks in.
Exactly. It's presented as a strategically engineered window, not just luck or timing. It's an arbitrage opportunity built into the system's design.
So for a smart investor looking at this, what kind of tactical plays could capitalize on this structure beyond just buy and stake?
Well, you could definitely compound. Restake the daily rewards to maximize the effect of that higher internal credit value over time.
Okay, lean into the compounding.
Or you could take daily profits in stablecoins for shorter-term income, if that's your strategy. The longer-term play is letting the buyback and burn hopefully drive that external price up towards the anchor.
Aligning your own capital strategy with how the ecosystem is designed to grow through supply reduction.
Precisely. It becomes about your own discipline and long-term view.
So diverse choices there. It's not just one path.
No. And, to sum up, AIEX is putting forward this vision of a revolutionary, fully integrated, AGI-powered financial ecosystem. Innovative modules, strategic tokenomics. It's definitely something demanding attention in the finance and crypto space.
So the final thought for you listening, reflecting on all this, what does it mean for your strategy? Are you just watching this AGI-driven future unfold, or are you thinking about participating, especially during this potential golden window where market price and internal credit are deliberately different? How might you harness this evolving golden goose economy? That's our deep dive for today. We hope we've given you the analysis and insights to be informed, maybe see things a bit differently. Until next time.